All right, hello everyone. Sorry I had to push the stream back just a little bit. Let me make sure I can see myself on YouTube. Yep, we are live. And there's an ad. So we're rolling. All right, everyone. This is going to be a quick Monday morning stream. Today is my day off, though it doesn't feel like it because I have a bunch of different things and tasks to do. I meant to go live yesterday, but as I said on my community tab, I just didn't have one in me. You know, when you go live and you broadcast, you're actually, in a way, performing for the audience, especially when you're camming up and showing your face. And every now and then, it's good to have a day or two just to relax and um, rest and watch TV and just veg out. So I have an article here, another article from Michelle Singletary, and I'm going to read it. I'm going to play the intro, and then on the other side, I will jump in. So I'll see you on the other side. This will be a quick Monday morning stream. I know that if Alonzo, the all-star, if Alonzo, the all-star advisor, if he rolls through, he might have something to say about this. So I'll see you on the other side. All right, good morning, everyone. Welcome back to my channel. My name is Dr. Anwar Youssef Dunbar, and this is Big Discussions 76. My original channel, first of all, please like this stream, please share it, and please subscribe to my channel. If you want to make a donation to the channel, the Super Chat is live. My Cash App and PayPal are here if you see fit. You guys are under no pressure to donate anything. Your eyeballs and your likes and your subscriptions are actually, well, those are payment enough. So if you're just jumping in here, please hit the like button. Well, this is going to be a financial talk, as I described in my most recent trailer and in that introduction. I have multiple topic areas, and I showed the slide in the recent trailer that I made for the channel. So here now, I have a lot that I will do here. And today, this is going to fall under financial literacy slash money, personal stories, thoughts of the day, and I guess you could argue, well, business slash entrepreneurship and current events. So this is going to cover a multitude of areas. I'm thinking about um, future guests. I'm thinking about what's an appropriate panel discussion to have in the future. So I have a lot of things I'm thinking about. So stay tuned. But it's a Monday. It's a Dr. Dunbar is very, very busy. It's interesting when you're YouTubing, the people, the subscribers only see um, you on YouTube. No one really knows all that you're doing on the outside of YouTube unless you tell them. So I have a bunch of different things that I need to get done today, but I wanted to get in here and do this stream. Um, the Big Words LLC Newsletter. Please consider subscribing. Some of you guys may be tired of hearing about this, but I'm trying to build this out. So that's there. There's a greeting and a subscription button at the bottom. Some of you have already subscribed, and I appreciate that. Uh, I'm going to talk about my book project. I'm not going to flash it. Well, actually, yeah, I think I will flash it. I think I will flash it. That's the newsletter. My book project is here. And the reason I'm showing this, well, because I'm getting it ready right now. I'm in the preliminary phase of editing the thing, or part one of the thing. But over on my community tab, I just shared my most recent interview with Jason Rowe, who is I don't want to say he's a minor character in the book. Jason comes in part two of the book, but when I was in Buffalo about a month ago, he sat down with me and we had another interview. I'm going to scroll to the bottom of this page so you can see who I'm talking about. Yeah, that's Jason right there. Jason Rowe, the Buffalo Traditional Bulls, class of 1996. He went on to play at Loyola of Maryland, and then he played some overseas pro ball, and now he's coaching at Bishop Timon back in Buffalo. So our most recent interview is on my community tab. Please check it out if you're a basketball person, or if you just like to hear storytelling. Give it a like, leave a comment. If you're not subscribed over there, please subscribe. I'd like to build out a basketball crowd over there. It's mostly Michigan football, but I'd like to build a basketball crowd to just expand as well. Also, I don't have the link here, but please check out Big Discussion 76 Science and Technology. I did a stream on Saturday regarding kidney transplantation and donation. So there's a lot of valuable information that I'm sharing over there. And yeah, please check that out, because I'm sure everyone knows someone who has suffered from some sort of kidney disease or has had to go on dialysis, and kidney disease actually kills quite a few folks. Anyway, so today, let's talk some taxes. So everyone, what I'm about to present, and this is to YouTube, and this is to anyone else watching who's unfamiliar with me, I'm not giving you financial advice. I'm sharing something from the Washington Post. Some people call it the Washington Compost because they don't like what Jeff Bezos' newspaper puts out. But Michelle Singletary, I read an article from her a couple of weeks ago. Her column is called "The Color of Money." I think she gives quality information, and she wrote something about how to handle about tax refunds, and also whether or not you're giving loans to the government throughout the year. And that stood out to me because that's something that I was not privy to up until I did my graduate studies at the University of Michigan. And one of my classmates, one of my lab mates said, you're loaning your money to the government throughout the year, why not just keep all of it and not pay them? So in other words, a lot of people bank on getting a refund, and they feel like they're getting a refund, but they're actually loaning their money out to the government throughout the year, and the government's just giving you your money back. So it's that whole principle. And also the tax deadline, well, for most people, just passed about 2 weeks ago, though, some people get extensions. And I've heard that for business people, they can file their taxes later in the year. And some people file their taxes quarterly. But this talks about, in our current environment, some would argue that we're in a recession. Some would argue that, well, there's a wave of inflation going on. Prices are elevated. Supply chains are backed up. Energy prices are through the roof because of the situation in Ukraine. But she basically makes the argument in this article that you could make smarter decisions with your money as opposed to loaning it to the government throughout the year. So I'm going to load up the digital version of this article. It's below in the description box. But I'm going to read my hard copy because I read this one already, and I think it's a little bit longer and a little bit more thorough than the version that's online. So I'm going to load this up for aesthetics. Salchi said, Art New Style. Let's see. Floyd says, checking in and hitting the like button. Appreciate that. Likes are free. Art New Style says, peace fam. Art fire panel last night. Important topic. Let's see. Salchi says, people don't know how to change their federal and state income tax withholdings. Okay. Yeah, Salchi, if you're holding on until the end and you want to come up once I get done, I'll drop the link. Yeah, but I don't intend to be on this for hours and hours because I have to get the financial report ready for one of my alma maters. I'm the treasurer for my Johnson C. Smith University DC alumni chapter. Okay, that's the digital version of this article, I believe, but the print version is actually entitled, especially now, don't aim for big tax refund. Okay, I'm gonna wet my palette here, and then I'm going to read. If you all have comments as I'm going along, please leave those in the chat. If you have questions, please leave those in the chat. I want to make this as interactive as possible. Okay, so this reads as follows. The average Internal Revenue Service tax refund at this point in the 2022 season is $3,175, up nearly 10% from a year ago. Many people see their four-figure tax refund year after year as a windfall. It's their cushion for the financially unexpected. Over the years, I've tried to persuade folks to change the way they think about a tax refund. It's not a bonus. Unless your tax situation changed during the year, maybe you had a baby or bought a home, you're just letting Uncle Sam hold your money for a year interest-free. Okay, maybe you don't trust yourself to save, so you rely on the refund to do it for you. Among those expecting refunds, 32% plan to save most or all of the money, according to a survey by Bankrate.com earlier this year. Readers have told me that the promise of a refund pushes them to file early. Others argue that in today's pitifully low interest rate environment, the amount of interest lost is pretty small. So they aren't concerned about letting the government play their banker. I don't know how all of this works out. If our government, if we're in a deficit, if the government is annually borrowing more money than if it's spending more money than it's taking in, I don't know how it can afford to give us refunds. I don't know. I don't understand all of this. There's an economist. I've talked about him here, Anthony Davies, that I want to interview. So maybe he can explain this to me if you ever link up. But I just don't understand how the government's in a deficit, but they can give us money back. I don't know. Make it make sense. As of April 8th, the IRS said it had issued more than 70 million refunds worth over $22 billion. Let's see. There's another interesting article here that I haven't read. It says weddings are booming again, so are the costs. All right. Yeah, okay. Please hit that like button. Please hit that like button if you want to make a donation. My Cash App and PayPal are there. The Super Chat is also live. Okay. But my palette. I wonder how many millions of individuals or couples receiving a refund could put that money to better use during the year. Only 44% of Americans could cover an unplanned $1,000 expense from savings, according to another survey by Bankrate.com. In a pinch, without a rainy day fund, 35% would have to borrow the money they needed by using a credit card, taking out a personal loan, or hitting up family and friends. If you've been using your tax refund as a forced savings technique, you should seriously reconsider that strategy as consumer prices rise because of inflation. Please hit that like button. Rising prices could be here for some time as the United States economy continues to deal with the financial fallout from the coronavirus and the war in Ukraine. You are going to need more money in your paycheck to deal with the price increases in food, gas, and utilities. Inflation is at its highest level in 40 years. In March, prices rose 8.5% compared with a year ago, according to the Bureau of Labor Statistics. The cost of gasoline rose 18.3% last month. If you're looking to replace your car this year, it'll cost you a lot more to buy a used or new vehicle. The average new vehicle loan increased to $39,721 at the end of 2021, up 12% from a year earlier, according to Experian. Used vehicle loans jumped 20% to $27,291, up from $22,630. The average monthly payment for new vehicles was $644, while the average monthly payment for a used car was $488. Whew. So I'm fortunate that I acquired. I don't know if LJ is out there listening from Savings Minus Debt, but the one point of view is that you don't actually own the item until you pay it off. So I was fortunate in terms of taking control or getting the vehicle. I think it's a good thing that I was able to get it in 2020. But even then, in July of 2020, at the Kia dealership, they told me that vehicles were becoming scarce. So, and that's when the world event, the pandemic, was just ramping up. If you let the federal government hold your money, you could end up borrowing more for your vehicle. Instead, get more out of your money in your paycheck and save for a higher down payment. Or use the money to handle your loan payment. Got a home equity line of credit, looking to buy a home this year? You could be facing higher costs for that debt. The Federal Reserve raised its target federal funds rate by a 0.25 percentage point and has signaled 6 more hikes by year's end in an effort to control inflation. The rate increases affect fixed rate mortgages and anyone with a variable rate loan. So I think they're gearing to increase the interest rates by the end of the year. As of April 14th, the 30-year fixed rate mortgage hit an average of 5% for the first time in over a decade, according to Freddie Mac. The 15-year fixed rate mortgage averaged 4.17% or 4.17%. A year ago, this time, the average rate for a 15-year fixed rate mortgage averaged 2.35%. So it doubled. Got revolving credit card debt. The rates on this debt are also trending up. Bankrate.com found that 23% of people expecting a refund said they planned to use it to pay down debt. Rather than wait for a lump sum refund to pay down this debt, avoid racking up interest charges by paying on it during the year. Okay, I'm almost done. It's not always possible to avoid getting a large refund. For some people, part or all of their tax benefits must be in the form of a refund, points out IRS spokesman Eric Smith. They have no choice when it's refundable, when it's the refundable portion of a benefit, such as the earned income tax credit or the child and dependent care credit, he said. As a wage earner, you are required to pay federal income tax by having it withheld from your paycheck throughout the year. The goal is to have your withholding match your actual tax liability. In a perfect world, everyone would nail it with maybe just a small balance due or a small refund, Smith said. You should evaluate your withholdings every year. You also want to make sure you don't have a hefty, unexpected tax bill, especially if you can't pay on time. The interest rate for the IRS has to charge, the interest rate that the IRS has to charge taxpayers when they can't pay what they owe has increased. As of April 1st, the rate for underpayment was 4%. The interest rate last spring, when people were filing their 2020 returns, was 3%. To check your withholding and make adjustments, if necessary, use the IRS withholding estimator at irs.gov. The estimator helps workers, self-employed people, and retirees who have wage income figure out how much should be withheld from their paychecks. Use the result to submit a new W-4 employees withholding certificate if needed. With inflation up, now's the time to go over your withholding for 2022. If you always aim to get a large refund, this is the year to change that habit. So again, I this was published on April 17th. I get the hard copy delivered to my place. The tax deadline of April 17th just passed, but I think she wrote this so that people could course correct throughout 2022. I know that for me, Salty, you still out there? I know that for me, for a while, I was getting a set amount back. It was 4 figures from the federal government, and then the federal government offered a Roth TSP. So for federal employees, we use the TSP, the Thrift Savings Plan, and there was a tax deferred component to that. So if you were paying into that, you were deferring paying the tax, and I believe that would increase your refund. But once they offered the TSP option, the Roth TSP option, I was recommended to use that option for the majority of my retirement savings. So in other words, pay the tax now as opposed to wondering what the tax will be later. And I think that changed the amount of money I was getting back because I was paying the taxes and those kinds of things. Of course, you're hearing stories and rumors that no matter what it is, later on the government can still come in and take your money. Salchi, I'm going to drop the link if you want to come up and say a few words about this. I'm not going to go very long with this stream because I have to get this financial report together for my alma mater. But you can come up and because you are privy to these things and you were doing taxes this year and probably years prior. So I'll wait a few minutes if you want to come up. If not, then I will shut down and get back to my financial report here and go outside and stretch my legs. Yeah, taxes are a very, very interesting topic. Okay, I think one of the most fascinating things, and that's why I would encourage everyone to check out the Rich Dad Poor Dad books, even if you just read book 1 and book 2. It turns out there are different tax laws for different people. If you are 100% an employee, there are tax laws for you. If you are self-employed or you own a job, there are tax laws for you. If you are a business owner, and some people would say, well, I have my own business. Well, I think there's a difference between being self-employed and owning a business structure with systems and where you don't have to actually be in there working the business all the time. So there are tax laws for those people, and there are tax laws for investors. So when you're an employee and your salary continues to rise, a lot of the tax loopholes and ways to minimize your tax, those go away or are non-existent. And a lot of deductions go away when you're an employee. So those individuals who are high earning professionals, they end up paying a lot of tax because the rules don't allow them a lot of wiggle room. Salchi's backstage. I'm going to bring him up, see what he has to say. Good morning, sir.
Good morning. How's
How you doing?
everything?
Good.
Everything's good with me. Everything's good.
Do you have any thoughts on what I just read or anything? Or
Oh yeah, definitely. She is correct. I mean, you can definitely go to that link to estimate your tax. The problem with the issue with that is unless you literally have a salary, you know, regardless of how many hours you work, it's going to be really hard to use that estimator because depending on if you have side income coming in or if you have bonuses, now you have to calculate that again, which means you have to recalculate those every time. But generally speaking, that's a good idea to do that. The other issue is, you have your federal income withholding, then you have your Social Security income withholding, then you have your Medicare income withholding. So, and obviously the state. So you can't do anything about the Medicare and the Social Security. It doesn't matter who you are; you're gonna have to pay for the most part. I mean, with few exceptions. Now, with the federal income tax withholding, uh, again, I don't want to complicate things, but generally speaking, if you're an employee, you're paying 6 point something percent because your employer pays half. A lot of people don't understand these things. Like when you're an employee, your employer is paying half of like all your withholdings. Now, when you become like self-employed, depending on certain things that you do, you're responsible. So as opposed to paying that 6 point something percent, 7 point something percent, you're paying 15 point some odd percent right off the rip, just for federal by itself. And then depending on the state that you're in, and then again, Medicare tax withholding and Social Security tax withholding. So when we had our previous conversations, this is why I always, stress that people really need a tax professional in their corner because, I mean, it doesn't matter if you don't know what you're going to be paying in taxes, whether you're an employee or whether you're some business owner. you won't know if an investment or if a raise or a certain position is even worth your time, literally, because you could get bumped up into the next tax bracket or two or three maybe, and then again things change based on if you have a 401k, this and the third, and basically all the 401ks, all those investments, quote unquote investments, all they really do today, if it's traditional, is marginally lower your take home dollars today. So it typically it does lower your effective tax rate, income tax rate today. The question is, as I spoke with you before, what is the tax rate going to be tomorrow, like years or decades from now? And the other issue is, as we are experiencing, as I've been talking about, is inflation. So you have that other factor going in as well. So again, most people are not financially sophisticated. So yeah, I mean, I've told many people during the tax season exactly how to get close to zero in terms of not owing, basically not owing. I mean, if you get a refund, I would prefer to get maybe like a few $100 refund, so you can have more of your money coming in. But again, the issue is, yeah, you have more of your money coming in, but again, if you don't understand investments, it doesn't matter where you put your money. You don't know if you're actually making a profit or not. You literally, it really doesn't matter if you're not financially savvy, period. Now, you will have more money in your pocket, again, depending on how much money you make, but then that still comes back to your financial IQ and also your spending habits. And again, also your income. So again, this is why I also harped on minimum, you need to be at $85,000 if you're single. Period. Now, if you're married, if both of y'all are, making at least $85,000 a year, okay, you guys are both financially savvy, then you guys will be okay. But I mean, that's pretty much what I had to say. Also, I mean, the tax rates federally, I mean, you're looking at 10%. You're looking at 10% to 37% out the rip. Okay, so if you're on the high end making $523,601 plus, you're at 37%. Period. So when you hear these people like Biden, again, I'm made political, when he's saying that people making less than 400,000, their tax rates aren't going up, technically, effectively, that's not true. First and foremost, I did taxes and I saw that myself. I also paid more taxes last year. I also owed because I was doing taxes on the side and I forgot to do something last year with my withholdings. So what he's saying is not true, because again, people don't understand finances, especially taxes. They won't understand these things. Only some 47 to 49% of people don't effectively pay federal taxes. A lot of people don't know that.
You said 47 to 49% don't?
47 to 49% effectively do not pay federal income taxes. They do not. They don't make enough money, so they will get a tax refund. It'll appear they'll have federal withholdings, but what will happen is that they will get a refund for the most part. So when you really do the math, it cancels it out. They actually didn't pay any federal income taxes because it didn't come up for 2022, but I can later on. I'll send you the link. I can show you exactly what the tax obligation is for various income levels. The IRS, they report this stuff. They just haven't reported the 2021s right now. I mean 2022s. But I'll send it to you. I'll text it to you, and you'll see it for yourself. You can see it only up to 100,000, and beyond that, then the calculations change. You have to do some more math. But right there, we're effectively talking about tax planning. And a lot of people don't even know that. But again, like I said, you really need to make more money. You really need to be at 85,000 plus a year. You just have to. I'm telling you, you just cannot. You cannot afford to save for the most part. It'll just take you too long, and you don't have effectively. You don't really have enough time. You just don't. And then based on what the average household expenditure was as of 2020, I believe, because the 2021s didn't come out yet, it was 61,000 some odd dollars. So plus or minus that, if that's what it costs per year, typically for a household, whether it's one person, two, three, four, think about that. They're spending roughly 61,000, and if the average person really only makes effectively $43,000 a year, Okay, let's say 2 people. Still, that's barely 85,000. So again, this is why I say this. As a single person, you need to be making 85,000 plus. So these are not like my feelings. I'm looking at figures that are one, coming from the IRS, who sees everybody's income, and then 2, other government entities that are obviously managing, the finances basically of society for Social Security and Social Security benefits across the board and Medicare. I'm telling you, man. If you don't, I'm just letting you. I just can't lie to people. I mean, I could, but I refuse to. If you are not making 85,000+ I'm telling you, especially if you're in the Midwest, okay, that's different. But if you're on the coast, forget about it. You need to, or you're just not gonna make it. It is what it is, man. And I'm telling you, I saw a lot of people out here in DC, man. I'm telling you right now. And then the last thing is, when it comes to Social Security income, a lot of people don't know that they tax that. They tax your Social Security income when you get older. So, I mean, unless you're like poor. And that's why I tell people all these things, these 401ks, all this stuff, the way how it's structured is for you to be poor or working poor. It's only for people who are effectively working poor for the most part. I mean, up to middle class. But beyond that, you pretty much phase out. You really can't even contribute to that stuff anyway. But I was dealing with a woman a couple of weeks ago doing her taxes, and she made some money. She made more money aside from just her Social Security income. And once you hit $24,000 of earned income, not including your Social Security. So what will happen is your Social Security, the portion of your income, that Social Security income, will be taxed at 50%. As soon as you hit $24,000, doesn't matter, part-time job or full-time job, if you have Social Security income coming in. Now, when you hit 34,000, they tax the Social Security income portion at 85%. Again, that means that, again, if you don't make a lot of money ASAP legally, you're literally you're literally in you're basically going to be poor, basically. But because we have credit and all these things and we have technology, it appears that people are doing better than they really are. And it's not true. Most people are really working poor. That's just the way it is. And people don't see this.
Hmm.
I'm just math. I'm just looking at math. I'm not looking at people's character or political. No, I'm just looking at math. Period.
Yep. Gotta trust the calculator.
Yes.
Um, that LJ says that. I can't take
Yes.
credit for that. Trust the
Yeah.
calculator. Floyd says, ask him, does he mean 80K net or gross, please?
80. I say 85,000 gross starting again because again, depending on where you live, obviously the federal income tax is the federal income tax. That rate is what it is. Now, depending on what state you're in, that changes. If you're in obviously if you're in Alaska, state income tax is 0%. Obviously, they're going to get you with sales and all this other stuff, but it is what it is. Within the union on the land, Alabama has the lowest, technically, I guess you would say. And that's 2%. And of course, crazy, I call it crazy California, is 13.30%. Freaking insane. And that's just federal and state income tax. Then you want to put in Social Security tax. Then you want to put in Medicare tax. Then you're going to have various state taxes for whatever you do, cars, purchasing, whatever. Gas, well, gas is federal. Again, a lot of people don't know that the federal tax is already included in your in your gas when you pay for that, which obviously funds the federal roads. So it is what it is, man. You need to be effectively at least gross 85,000 because roughly you're bringing home, depending on the state that you're in, you're bringing home some $45 to $5,000 per month, take home, roughly. And again, that doesn't account for any 401k, IRA, anything like that. So that's just raw, extremely raw numbers.
Okay.
Yep.
All right. Do you have anything else? Or I mean, that was a lot. I
Yeah,
appreciate
yeah,
you coming up and sharing
yeah. I
that.
mean, well, unless there was any other questions or anything else, I mean, that was pretty much it. But I mean, what she's saying again, what she's saying is correct. But um, my thing is always to tell people, I mean, if you don't understand at least the basics, and if you aren't really watching your spending habits, then you're not going to beat the math, and nobody beats time. So, you know, it is what it is.
Okay. Before you go, I was thinking about something my mentor told me, which is that there's a difference between a tax preparer and a tax advisor.
Oh, big difference. Different worlds. Okay, and the vast majority are tax preparers, and then even within them, even within that world, it's like most things, man. There's only the top 1%, top 5, top 10, top 20, and as far as I'm concerned, man, if you're dealing with anybody below that, it's in my opinion not worth it. But again, because people don't understand the basics, they don't know how good somebody is. And then if they don't really know, if they don't really understand their situation, they don't know who to go to. They just don't. But he is absolutely correct. And then even amongst CPAs, the percentage of CPAs who actually specialize in taxes is 3 to 4%. That's it. Most people think that these accountants or CPAs, no, there's only some 3 or 4% that specialize in taxes. And then again, the best guys, most people can't afford us. Period. They just can't. Why? They don't make enough money. And then it's not worth our time to really technically, and they're not going to say this publicly, but it's not worth our time. If I'm going to sit here, I mean, technically, I can sit here and do regular taxes. Let's say I do it on the side by myself. If it's a simple tax, I can easily charge 150 to 200 to $200, and I'm really good now. So I could pop that out by myself without them being in my face. I could literally get it done in 10 to 15 minutes with zero errors. So think about that. I can at least do four, pumping it out on the side, easy. Or I can do somebody who's making more money and we've built a relationship and they actually listen, hundreds to thousands. And it may take me 2 to 3 hours to do it, but one is more sophisticated. Two, it keeps me on my game. And three, I wouldn't be bored. So again, this is why a lot of people don't understand. This is why I tell people make more money. So you can also afford better services. Not to say that people, regular tax. I mean, you can get lucky and get a regular tax prep, and they know what they're doing. But yeah, you can know where to put the numbers, but do you understand the numbers? Do you
Well,
understand?
well, for one thing, I think people need to keep in mind is that number one, the tax code is always changing and evolving.
That's right.
It is dense. I can't imagine reading through the whole thing. The other thing is, in my mind, there's a delineation between just having a W two income versus adding on a business, versus having to deduct your mortgage interest. So once you add on these different layers, I think there's no way for the average person to know
Oh,
how to do all that. Yeah.
it's not. And again, even some professionals. And the other thing is, even with the professionals, you need to deal with someone who's really good at, again, your type of situation. Because what you just stated, in the office I was at, that's basically that's like a basic complex tax situation. Like when you said that, I was already starting to do stuff in my head
Mhm.
automatically because that's how I was doing it at the job. And again, it depends on the industry, and when it comes to businesses and the third, the most complicated part is the investments and the business because there's a lot of moving parts in that. When W-2s are pretty simple, and then also kind of gets more complex as the income goes up. It really doesn't get complex until someone is like effectively what they consider high income employee, which it hits one. I think it just went up 137,500, something like that. And then once you go up to the next level, which by IRS standards you're like an executive, which I think is like 235 plus, and then that's when you start dealing with um, more equity stocks. That's when the game gets serious. That's what I plan on doing next year. Like I personally, I don't want to do regular tax. I don't want to do regular taxes. I don't even want to touch them. After the tax season, I'm all set. I only want to do real estate investors, small business owners, and high income earners. Period. That's
Okay.
worth my time.
Yeah. All right. So for the YouTube algorithm, we're not rendering advice. We're not.
Yeah,
This is
exactly.
just an educational
Yeah,
discussion
yeah,
based upon an article, a column by Michelle Singletary from the Washington Post. So,
correct.
okay, Salty, there are two more, and then I have a hard
Yeah,
stop.
that's fine. Yeah.
Floyd, these are all from Floyd. Floyd says, and I don't know if you know this, the VA disability is tax free. He asked that.
Oh, again, stuff like that. I mean, those are one-offs, and yeah, that's different. I mean, yeah, if you qualify, okay, but then again, what was your income prior, and what is your income after the fact? So, again, me personally, I don't want to qualify for damn near any of these types of things. In my opinion, for the most part, that means I'm not making enough money. Like when you really boil the numbers down, that means you're not, because the government's literally like telling you, like like you could be making, you could be making enough money just to survive, obviously, but you're just not making enough money. And I said this to one of the guys I was working with doing taxes, and mind you, the guy's a CPA. He works on Capitol Hill. He reports directly to the IRS, to Congress. Reports directly to Congress. And prior to that, he was closing banks. And I said that to him, and he looked up at me. He smiled. He said, "Very few people get that." I said, "Yeah, I could tell. Look at the numbers. Look at the tax. Look at the child tax credits. Look, yeah, as he said, VA disability. Okay, that's fine. I mean, for the average person who could qualify, what was their income? Probably not that high. Okay, your income goes down a little bit, but hopefully you're not disabled completely that you actually can't work. So even if you do get it, but you're handicapped, that's how I
Yeah.
see that.
Floyd, this last question, I'm skeptical to ask this on you. Excuse me. I'm skeptical to ask this on YouTube because I would encourage you to reach out to Salty over on IG. Uh, I don't want to render advice here on this,
Okay.
uh,
Oh,
but
okay.
yeah, I don't want to do that here. Uh,
Okay. Well, I mean, I won't get into specifics, but
yeah.
I would just give one good example.
Okay.
One of the last taxes that I did this year was, and I'm not going to give her name, obviously, but she used to work. She used to work at an investment firm. Okay. Now she works for the Federal Reserve. That's what she specializes in. They don't know what she does. Literally, they hired her because they don't know jack about crypto. She does, and she and I was doing her taxes for 3 hours. That was one of the people I was telling you about who actually has a complicated tax.
Hmm.
Oh yeah, we were talking about crypto. She can't invest in crypto right now because she works for the Federal Reserve and she has unfair advantage.
Hmm.
Yeah, but yeah, it's you aren't going to get taxed until, I mean, you won't get taxed until you spend it, really. So I mean, yeah, you can allocate money to it, but the tax implications don't hit until you actually spend the money. So I mean, that's really all you need to understand and know. But before you even invest, you need to understand the basics of the technology, really. And again, like I said, the lady I did taxes with, I'm telling you, we were talking about it, and sadly, we were laughing at most people who invest in it because they don't know jack. And trust me, her federal tax, she paid right there on the spot. She paid almost $190,000 federal income tax. That's how much money she made last year. She paid cash swipe right there.
Hmm.
Yeah,
Okay. All right. Well, everyone, Salchi, thank you for coming up and
yeah,
adding to the discussion.
hmm
So yeah, we'll talk some more soon.
definitely.
Yeah. All right, everyone. I have a hard stop. Got to finish this financial report for my Johnson C. Smith University DC alumni chapter, and then do some other things today. So thank you for those of you who humored me throughout this discussion. I think I'm going to update the title and give full attribution to Michelle Singletary. The article's below in the description box. Floyd, thank you for all your questions. You said um, just went full legit with being a business owner this year, also known as filing an LLC and having a business bank account. These tax laws keep me up at night 3 to 4 nights out of the week. Um, Perhaps thinking about hiring an advisor might be prudent based upon the complexities of the tax laws. He said, don't get me started with my crypto coins and the crazy tax laws, which I don't understand. Yep, might be wise to hire an advisor. Okay, everyone, that's what I wanted to say. See, if you're watching on the playback, please like, share, and subscribe. If you want to make a donation to the channel, my Cash App and PayPal are below in the description box. Everyone, enjoy the rest of your Monday. Look out for more content. Keep your eyes on my community tab. And as always, remember that your attitude determines your altitude. Take care, and I'll talk to you the next time. Bye-bye.